off. Diane King Hall joins us from New York for what is generally a list of positive notes out. XYZ, what is this ticker for? What is this? Why can't they just pick one?
They're all over the place. I mean, it was SQ, Square, now it's Block, XYZ.
What's Jack doing?
Pick a lane. I know, right? And that's been the question. What is Jack doing? I mean, we saw the stock seriously sell off this year, especially off the back of its last earnings report, where they missed expectations. You saw that sharp drop, 18% in one day. But okay, the past is the past. We'll put a bookmark in that kind of element to this. They're getting an upgrade today. This is from Keefe Bruyette. They've upgraded Block to outperform, so essentially a buy rating, from market perform. So they essentially see a more favorable outlook for this stock going forward from here through the balance of the year. The new price target is $80, so that signals a more than 30% upside from here. And keep in mind, it's lost more than 30% year to date. Now, it is lower than their previous price target, but again, still signals upside and confidence in the potential of returns this year. As you know, they did miss expectations recently, but they've done some things to kind of shift the narrative. They see a more attractive, for Keefe Bruyette, they see a more attractive risk-reward balance for Block. They think now is essentially a good opportunity to get in. They think that they will meet their guidance. In their recent quarterly report, they guided for gross profit growth this year of 15% to more than $10 billion. They're projecting margins of 21%. So that would be an acceleration from the previous period. And so they, Keefe Bruyette essentially saying, despite the skepticism that has existed around Block, they think that is too negative, and they see the potential for the stock to rebound. Even with the fade that we're seeing in the broader market today, Block is still holding on to a gain that it's had since the open.
Okay. Right now up a little bit, to your point, even as the market is under some pressure, but they still just got slammed so hard on earnings that I'm not sure this is going to turn it around, but at least it's working so far. I'm more interested in this Apple note. Price target hike from Evercore, stocks at 214. Their 275 is pretty bullish.
It is. It would mark an all-time high if it hits that level. Very bullish from here. It would, mean that this stock needs to accelerate more than 20% this year to reach that level. So they have Evercore ISI still maintaining their outperform rating. So they've got an outperform rating on Apple. They think that they're well positioned to maintain mid-single-digit sales growth, along with low to mid-teens free cash flow and EPS growth over the next essentially several years. They think that while the focus tends to be on iPhone sales, that's too narrow. There should be more attention paid to their consistent performance on free cash flow growth, consistent EPS. They've got gross margin improvements in their favor, operational leverage, and of course the share buybacks. I think those are all positives that should be noted. And then just the overall consistency and performance when it comes to Apple. They call it essentially a tech staple, and they believe they can not only sustain but further grow their valuations, and they've just got strong financial fundamentals. So I thought it was interesting. I think that it can be seen as a tech staple, but does that mean they should be as bullish as they are? That remains to be seen. Another growth area they talked about is their growth in India and their expansion just overall in emerging markets. And then they also talked about Apple Intelligence. Now, I know there are questions about Apple Intelligence, especially because it's been this slow rollout, and then they had the delay for Siri. But Evercore ISI, very bullish on Apple.
I'm glad to hear someone talk about the staple of tech theme, because that's been something I've been working with a lot. So that's good to see confirmation of that narrative on the street. Last one, Ralph Lauren, down despite a full-on upgrade to a buy.
Yeah. Look,
from Goldman.
It initially started higher before you saw the broader market turning. So Goldman upgrading Ralph Lauren to a buy from neutral. Their price target now is $286 a share. So that suggests about 30% upside from here. They think, that the macro picture is not going to be that they're not as exposed to it as other peers. Tariffs, department store slowdowns, that they don't think that they will suffer from that exposure to that. They think they're more insulated, so essentially Goldman thinking that. And of course, they don't see them being hurt by the challenges that face the lower income consumer. That does not tend to be the consumer that Ralph Lauren faces. They think that the pullback in valuations because of macro uncertainty and market volatility actually creates an entry point for Ralph Lauren for here. And they think that despite this volatile macro backdrop, that Ralph Lauren wouldn't suffer.
Okay. Well, that's kind of the theme, I think, that we've heard from some of these retailers is, there's going to be an affluent tier that are going to remain unharmed, though RLs, I don't know. You go to the flagship store, bring your wallet, but otherwise, there's some pretty basic stuff that they offer in discounters and wholesale places. Thanks, Diane. Appreciate it very much.
All right. You got it.
Thank you.